Great. Today, it's our pleasure to have with us Steven Rosenblatt, who is a co-founder, general partner of Oceans, based out of New York. And so we'll go into some detail on Steven's background and then the background of how he started his firm. And I thought we could start with Steven as opposed to me kind of giving your background. Steven, it's great to have you on. Can you tell us a little bit about you as a person, how you got into technology and then how you got into venture?
Yeah, sure. It's great to be here. Thanks for having me. So my path, I graduated from the University of Michigan in 1998, and I decided I went into commercial real estate for my first year in my career. And what I realized was that there was this thing called the internet starting to happen and all these little startups popping around New York City. And I decided that instead of trying to go after large established CFOs, corporations that have been around, I was going to go after these new founders because these new founders had no long-term relationships. And that led me to a startup. The company was called the Virtual Music Vault, TVMV. We were on 11th between B and C, or they were at the time on 11th between B and C in New York City. And I pitched the founder on a real estate opportunity, and he called me within a couple days later and said, "Steven, we all loved you. We want you to come work with us." And I had no idea what I was getting into, except it looked like it was a lot of fun. It was a dot-com startup. It was New York, and they had a dog running around the office, and I was 23 years old. So I said, what could go wrong? And so that's how I got into the internet in New York City in 99, and there were not a lot of us.
What was that startup about? Was it like really virtual, what it sounds like, virtual music in the cloud kind of thing?
So we actually changed the name to Music Vision, but we were one of the first vertical ad networks. So if you remember, again, the internet, early internet, and especially New York, was a lot of ad tech, a lot of digital media, that kind of transformation from traditional media to digital media. And we happened to be one of the companies that were rolling up all these. There were hundreds and hundreds of music and entertainment sites. There were artists like bands like NSYNC, Outkast back in the day. They needed help building their websites. They needed someone to help sell sponsorships. We aggregated audience and inventory, kind of like a vertical DoubleClick. DoubleClick was really one of the early pioneers in 24/7 media. And that was what Music Vision did. So I had no idea what I was getting into. I, jumped right in, selling ads online. And again, back then in New York, there were these small parties, communities, events, but there were maybe like 100 of us, if that, maybe 50 that started in kind of the digital internet age. And that's what my first step in New York, in tech. And that's how I kind of got my start.
And how has the New York VC and tech ecosystem evolved since then?
So I'll kind of maybe take you through my journey, right? So it was early digital media, which I would say the first several years of New York was a lot of ad tech digital media. And then Google brought engineers to New York around 2003, 2004. And that was kind of like the big moment where we finally had some real high quality engineers and folks here. And then mobile started to become a thing, mobile and social. And so I got the mobile bug because I was working at a company called Dennis Publishing. We published Maxim stuff in Blender magazine, but I was running digital. And we were at the the cutting edge of building websites for brands and really early mobile. And I was like, I don't know what's going to happen in the future, but I'm going to take a huge bet that we're going to be doing things on our mobile devices. And again, this is like pre-App Store, pre-iPhone. And after 4.5 years there, I decided to join a very early startup out of Waltham, Massachusetts called Quattro Wireless. And we were one of the first companies to build an SDK, software developer kit. We were one of the first to really think about how do you help get publishers into mobile, both in terms of traditional web into WAP, but also then apps started to pop up. And how do you help monetize that? So we built a lot of the early infrastructure to make that happen. And that led to 2 years later, we got acquired.
But that was one of the early pioneers of ad tech on mobile devices, right? There were like three or four companies. Millennial, I think, was one out of Baltimore. and Quattro was like one of the 3 or 4, correct?
That's right. That's right. AdMob was another one. So Google bought AdMob, Apple bought, and we sold our company. 2008, 9 was crazy with the financial crisis. There were moments where I was like, oh my, we were like, we had to cut burn. We weren't sure we were going to make it. We really pioneered that tech and started to build a real business. And then we got acquired by Apple. So again, I would say like the 2000 to 2000, almost like 8 period was really a lot of digital media. You had Google come here. My business partner, Josh, and co-founder, had opened Facebook New York in 2007. So the early aspects of social. And then there were companies like Foursquare and Tumblr, which eventually I joined Foursquare, and I'll get into that really were kind of like the next generation of these new technology companies being built here in New York. Really small community. You knew everyone. If you didn't know everyone, you were 2 degrees away from knowing everyone. And so I really got to, when we sold the company to Apple, I had all these founders coming at me like for advice and guidance, right? Oh my God, how'd you do that? How'd you figure out how to monetize mobile? No one can figure it out. We're still on this small little screen. All these questions I got, and a lot of that had to do with how do you figure out product market fit, go to market? How do you figure out how to hire the right people for, the startup? How do you figure out how to raise money? And so I was doing that early on, which after I left Apple, I launched a business for Apple, helped launch it called iAd in 2010 through 12. And then I was asked by one of Foursquare investors, Ron Conway, who's a longtime friend and mentor, to meet Foursquare. And that's what got me into Foursquare. New York really started to grow, in the late 2010 to 12 period, started to build. There was, more than one VC firm. Union Square Ventures was here from the beginning. There were a couple other firms that started to open up, ENIAC, Lyra Hippo. But it's still, you knew everyone. And I would say the last decade has been this explosion of New York tech. Everyone who used to build in Boston now comes to New York. I think because we've had a lot of exits from Datadog to Mongo, and, Google and Facebook brought just thousands of engineers here, it created this ecosystem.
And tell us about Foursquare. What was your role there? And, how did that kind of play into your trip into venture?
What happened to me when I left Apple, I was really obsessed with the fact that you had all these founders who kept coming to me, asking me questions about how to build companies. And I kept saying, well, why don't you go talk to your VC? And a lot of them were like, well, there are really no VCs to talk to, or they've never kind of gone through the same journey you went through. And so I kind of I was doing my own research and talking to a lot of friends in the business, John Borthwick at BetaWorks, who had really built one of the first studio models. I had been mentoring a David Tisch class. David Tisch now runs Box and had started Box, but he was running Techstars. So I looked at some of the accelerator studios. And for me, I was like, I'm going to go start kind of like an operator-led venture firm, right? Like New York doesn't have any. And I know as a founder, I had amazing investors, Bob Davis from Highland Capital, Andy Goldfarb from Globespan. But I realized in the early stage that didn't really exist. So I was on the journey to go start a firm back then, until Ron Conway, in his very persuasive way where you can't say no to him, said, do me a favor, before you do, I want you to meet one of my companies. And I said, okay, tell me your favorite New York company. He's like, you got to meet Foursquare. Foursquare had just raised really the first high profile round for Andreessen Horowitz in New York. So that was huge round, 75 million. Foursquare was kind of the darling of New York, the darling of South by Southwest. And so they asked me to come in and help them. And I said, sure, I'll do it for 3 months, and I'll just advise, and I'll come in 2-3 days a week and give you some ideas on how to build the business. And Dennis Crowley, who's now, again, dear friend and was a co-founder of Foursquare, was like, well, why don't you come in 4 days a week and sit with us and really get under the hood with us? So I said, great, I'll do that. Gave me an excuse to get out of my New York City apartment where I had just had a baby. I had 2 young kids, and I was like, okay, great, I'll go do that. And before you knew it, I started to get kind of under the hood, started asking questions. And what I quickly realized was that the model they had raised kind of money on, which was trying to build a Yelp competitor, I was like, it's never going to work. It's not going to work in mobile. It's not going to work with the scale we have. I said, however, I just spent the last 2 years at Apple. I launched iAd. The number one question I got from every CEO and CMO is, how do I tap location data? And it was something we really couldn't do at Apple for privacy reasons and all that other stuff. And I'm like, here's Foursquare. They built this really interesting, great technology, developer platform ecosystem. They've got kind of the infrastructure. We built like this large panel of consumers, but I think the real business is around a B2B business, not a B2C business. And so that was kind of where I had suggested the company start and go. And our board, Ben Horowitz from Andreessen, Albert Wenger from Union Square, Bijan Sabet was a board observer from Spark. They all kind of were like, we should keep Steven. we don't want to see Steven leave. And I really loved the culture of the company. So I wound up joining full time. I said, all right, I'll put this vision and this dream of starting this early stage fund and this need that I think I see in New York on hold. And so I came in as chief revenue officer and left 6 years later as president, but took Foursquare from a company that was losing, north of 30 million a year, didn't have any revenue. Only revenue we had was the sublease space from the floor above us. And I was like, that's not revenue. And then when I left, we were doing kind of on about 100 million revenue company and nearly profitable. And so it was this crazy journey, this crazy pivot. We were the darlings when we were losing a ton of money. The press hated us when we were making money. And we went through this crazy cycle, but ultimately built a real business and a real company. But for me, I just kept coming back to, I love meeting with founders. I would do that. I would see people. Again, Foursquare was hot. So we'd see all these companies. I had Eric Yuan from Zoom come and wanted to get, Foursquare using Zoom. We were early Stripe customers. So I'd meet all these founders and I was just like, the thing I had thought about in 2012 is burning in the back of my head that there's now, if anything, the ecosystem has grown. I'm having the same conversation. There may be a few more firms, still very few who are operator-led, focus on kind of the early seed part, where it's the hardest part, in my opinion. And I was like, I still have to go build this. And that's what I decided to do when I left in 2018.
That the background that you have and the experiences that you have undoubtedly shaped you as a venture capitalist today. Talk to us a little bit about, what are some of the most important lessons that you've garnered from your background, as an operator into as an investor today?
Well, I think when we decided to put Oceans together, it was around the three core themes that I felt in the 0 to 1 phase, assuming, you had the right engineers and technical capabilities were the most important themes. It is all about people, right? I think the best companies have the best people and they have the best people in the right positions and roles. And I think that was one of the things I would always talk to founders about. Founders would say, I really suck at hiring a salesperson, or every time I do, I mess it up, or, how do I think about filling this particular gap, or I hired these people and I need to shape things. So a lot of people-oriented questions. And truthfully, if you don't get the people right, one bad hire in your first 5 or 10 is 10 to 20% of your company.
Just to stop you right there, on the people part, what do you think are the most important characteristics that make for, an incredible founder?
Number one is an intense passion and curiosity for the thing that they're going out to build. We at Oceans typically like to back repeat founders, not exclusively, or we back founders with who've been at companies that we know they were early on. We know that the hiring bar at those companies are off the charts high. They're looking for the best talent. But I think it's listen, building a startup is really hard. Outside of having children and being a parent, I think it is definitely the hardest thing one can do. And you're going to go through a lot of ups and downs. Forget, what's on paper. It's why are they building this? And are they the right person to build this? And when they get punched in the face, are they just going to give up, or are they going to keep going because they have to build this? And so there's so much that we try and assess that comes from the heart that you can't, so that's number one. Number two is, can they attract great talent, right? Will they be able to hire the best talent? Do people want to work for them? Would I want to go work for this person, right? Would we want to go work for this person? And so we really try and understand, can they attract? Is this someone people are going to work for? And again, you can have all different ranges of personalities, but will they be able to do that? And then will they be able to like pivot, right? Every great company I know, I mean, Foursquare was one of them, and Quattro, we started out as a WAP builder company, right? And then we became kind of like, transformed. Every great startup I know, or at least, 90 something percent of them go through some form of pivot. And so I think what I've seen with founders is they're so myopically focused and they can't see where they need to, kind of tweak and change. And that's where they run into trouble and get out of business. And so I think the ability to like, kind of be able to move and change and tweak, I think is really important as well, what we look for.
But back to your point, you said people is number one.
Yeah, the second thing, there's going to market and there's actually finding product, like really scalable product market fit, I like to call it, and scale being key. I think, a lot of founders early on, right, what do they want to do? They're just so happy to have any customer, any partner, any consumer that they just, they go down a rabbit hole, and sometimes it's the wrong hole, right? Because they're just happy, but there aren't 100 or 1,000 or 1,000,000 users or customers after that behind that. And so what really try to, kind of help founders think through that we think is so critically important is why is this the right first customer for you? And how many of them exist behind that, right? And even if you can get them, doesn't mean it's the right customer to go after. And so, or the right users to go after. I mean, I think Foursquare, that was one of Foursquare's consumer challenges, I think, which is we had really loyal, passionate users. We had a certain cohort, but one of the probable mistakes we had is it was almost like it was so niche. It was like built for people like a very particular type of user, hipster, East Village kind of user, which was great. And that expanded. But like we never really thought about, okay, is the mom in the Midwest going to use it? Is, someone in a particular like other market or someone who's not going out all the time, because most people don't. And so I think, again, it's about scalable product market fit. And then the third thing is, listen, venture, you got to understand the game of venture, right? You got to understand how VCs think. You got to understand how to raise capital. You got to understand how to structure your cap table the right way. I mean, how many times have we seen cap tables early on, the way they raise, how many, they stack safes on safes, or they're raising from weird kind of, family office type or individuals that are just not, don't signal the right thing down the road. And so really just helping founders think through that. So that was it. And that was how we started Oceans, which is we can help in these three areas. I think we have, a really good chance to at least de-risk the execution side of thing. At the end of the day, they still got to, build something that people want and love and so on and so forth. So that's kind of the, what I took away from my experience that we really kind of brought into founding and building Oceans.
And in terms of kind of stage, this would be, I'm guessing is like pre-seed to seed stage that you get involved, basically?
Yeah.
Is it at the idea stage, or do you want people to already have like a prototype product?
We'll invest in an idea, especially from a team and a founder. There's a founder in New York that is in stealth mode right now. I've known him for a while. He sold his previous company to Twitter. He's fantastic.
So you're almost like a partner to him, in essence.
Correct.
In starting it.
Yeah. Yeah. And they trust us. They know, like, I think, but so we'll go idea for a certain founder cohort to at least showing some MVP to, and then some revenue. But we're really like today pre-seed and what I call early seed. We're not doing the, $8 million seed at a, 100 million valuation, the 20 million seed at 100 million valuation to like, that's not us. We're really trying to we're a step up, earlier that, and then let some of the other funds who want to do that, do like the next seed where they want to see some traction. The other thing too, is we really want to see, we really like to see skin in the game. I think that was one of the biggest mistakes of the 2020 to 22 period. You just one of the things we really dug into is this person the minute it goes bad, are they going back to their corporate job?
Right.
Because they started something because they could and they could raise money and they look good on paper. But at the end of the day, as soon as the going gets tough, they're out. Or they, again, really building this for the right reason. And so what we really do like to see from most of our founders, at least some, show us you've got some skin in the game, right? You've either been coding and building and hacking, you've gotten some progress, you've talked to, you've done your research, whatever it is, show us that you're not going to just walk away when things get hard.
Yeah. And that's truly important. And obviously, we've talked to many other GPs who all say, early on, it's all about the team, the founders, et cetera. How do you, to walk, so let's say I'm an, new founder and have an idea and an early product. How would you go about vetting me as a founder? What's that process like? Do you spend a long time understanding the motivations? I sometimes joke that our job is like 1/3 psychology. So walk us through how you get comfortable backing a new founder.
It's funny you say that, because I just was at Michigan last week speaking to a bunch of students, and I was speaking about my journey, and they asked, what did I study? And I was like, I was actually a psych major at Michigan, right? I said, because so much, and it's so relevant because it is true, right? I think, when I meet a founder, typically what I'm doing is really trying to, ask a lot of questions to understand why are they starting this? Why are they the best person to do this? How are they thinking about going about it? And I think the thing we always hear from founders, I mean, literally always, is they get off the call, or towards the end of the call, they said, this is so amazing. This is so refreshing, because you're asking me really hard questions, which I appreciate, but you're asking me real business, the real questions, right? And I think we're not a check the box kind of approach. I think what we try to do is understand, okay, every founder is different, every personality is different, right? The way they approach things is different, but what we're trying to do is really assess, tell me why a customer or consumer needs this. Infinitely better, infinitely cheaper, infinitely faster, whatever it is than what exists today. And really want to try and understand the motivation, their approach, the way they think about things, and then how, what's the vision, right? Where do they think this can go? And then my partner, Glenn, who's spent his career on the talent side, Glenn was the first business recruiter at Facebook in 2008. Cheryl brought him over from Google. He's hired thousands and thousands of the best talent in tech. Before that was at Google opening edge offices. Typically, Glenn will assess and really unpack the quality and the talent around them and the skills for what they're building. We always have kind of, my other two partners, me, Josh, Glenn, and then there's Brian, who's got a finance background, Corp Dev M&A, Time Warner, Time Inc. Sarah, who's got a 20-year client services op. We all kind of come at things from different angles and different perspectives to try and make sure we're looking at every aspect, every dimension of a company as well as we can, depending on where they are in their life cycle. And so that's kind of how we approach it. We have a very consistent process too, in terms of how we kind of hold ourselves accountable, but we ask different questions depending on, I think the scenario that we're dealing with the founder. So it's a lot of heavy, and we know, typically we're at most 2 degrees separated from someone we know really well that knows that founder. And so we're really able to get under the hood about the person, their background, how they think about the things that we think are important, and validate kind of what they said and what they actually, have done.
What do you love the most about being an investor, and what do you think is the most challenging component of the job?
So what I love is, you're constantly context switching. One day I'm talking to a founder about building the Twilio for the space economy, and the next day I'm talking to a different founder about building kind of AI for medical billing. And there's, go on and on. So there's the inspiration you get from meeting with a lot of different founders, kind of the different themes that, seeing the world so differently, really kind of seeing things bubble up in terms of where the world in the future is going. And then really being able to, when we can, have an impact. I got an email this week from a founder, and he said, he got preempted, raising a great new round. And he said, email to me back with, Steven, I can't tell you how much I appreciate you. That's pretty great, right? That's pretty awesome. And so I think having that impact in those existential moments when, these founders are putting their blood, sweat, and tears and sacrificing so much of their life to build this company is really incredibly rewarding. I think the hardest thing, and probably the hardest thing when I started, and now I've gotten more comfortable and used to it, is, as we know, it's like having kids. I have two teenagers. I think of my founders sometimes as the same approach. Sometimes you just have to run into the wall and learn. Like you can't tell them what to do. You can ask them a lot of questions. You can make them think critically. You can kind of share a lot of stories about what you went through and how you learned in the hard way to help them try and avoid the pain. We kind of consider ourselves a lot of times venture coaches, not just venture capitalists. But at the end of the day, you can't run their business. They have to run it and they have to figure it out. And you want them to do that because that's what's going to make them successful. And so those moments where you're like, I just want to get in here and just solve this, and go do it. You just know you can't do it. And I think that was hard early on, less hard now.
What's the environment in New York like right now? I mean, obviously, and you've lived it through the very beginning, right, of tech during the .com. Then there was a big downturn. You've lived kind of like the big growth in the last 10 years. What is it like now? Are people still very engaged? I know you had a lot of new funds, some very solo GP funds, a lot of different firms started in New York. What is it like right now? Is there a lot of innovation? Are you seeing good founders still starting great companies? What's the view kind of at the early stage?
Well, I think there's just a lot of funds being started all over. And I think there's just a lot of people who should not be in the venture fund business that got into it the last couple of years. And I think it's going to learn the hard way what really being a venture capitalist is like. And more importantly, just like some of them never had, any experience building a company, any experience, right? They've come, and it's great, come from different backgrounds. Awesome. But I think just in general, there's just too many, I think, people out there that, we've seen these cycles before that will disappear. New York, I was with a founder yesterday who was in from San Francisco, and she's like, oh my God, like there's so much energy here. And there is so much energy here. I was at dinner last night with a bunch of other VCs in a small room talking, just talking about what's happening, kind of in New York. And I think there's not a night of the week where you can't find yourself at a dinner, an event, a party, talking, meeting, seeing founders if you want to be at one of those. I think the best builders in general, like I've seen serial entrepreneurs who've built here, are back building again. And I think AI has a lot to do with it. They see this real opportunity. But there's an incredible ecosystem of amazing talent that's been building here for a long time. There's a lot of great companies. I think the thing too that's different now is think about like where we are in the tech cycle and think about even where AI is going to be, is it's applied to every industry, right? 25 years ago, it was about building the plumbing for the tech industry, which is where, Silicon Valley obviously kind of ruled, and still the biggest ecosystem. But what's changed is every company is a tech company. And New York is the home of finance, fashion, real estate. I mean, you name it. And so I think like New York is now ripe and prime if you're building companies for, the broad masses and broad consumer and broad industries. New York is an incredible place to start. So
do you think that changes with AI? I don't think it does, but I'm just curious because you talked about it's all about the vertical spaces, right? It's all about the specific applications to the industry and kind of getting closer to the end user. AI is obviously a horizontal technology that can apply across the board, and you can still obviously apply it vertically. At this stage of AI, do you see it still being very relevant given kind of the New York strengths?
Oh, yeah, for sure. Yeah, for sure. Definitely. I think, listen, are you going to see like the LLM competition where you're raising tens of billions? I think that's probably more of like a Valley thing. But I think the application layer, the infrastructure layer, and just because New York, this is what I tell, I always laugh, the whole Miami thing over the last couple of years. Oh, Miami is going to be hot. Miami's going to be great. Miami is where everyone's going. New York's taking 20 years to build a robust ecosystem. You need thousands and thousands of engineers to build a robust ecosystem. Long time to really create kind of that vibrancy. And you need lots of exits. And obviously that helps because that allows flexible freedom for people to start the companies. And New York has now had that, right? We've had the Tumblrs, the world that got acquired. Like I said, the Datadogs, the Mongos, there's a lot of ad tech companies. There's a lot of just technology companies, and Yext, which went public here. And so you've got a lot of these networks that are out here and who started. And frankly, they're just, San Francisco may not have been not the right market for them to live in, right? Personally. And New York's a great place. There's so much going on. There's so much people. And there's so much diverse thinking here that I think for the next wave, New York is set up. And it's why you're seeing so many, all the numbers. New York is always up there. If we're not one, we're two, maybe, 2.5 in terms of like what companies are getting seeded over the last couple of years, and certainly last 2 years. It's happening in New York. I said no to moving to the Valley like so many times, and because I just believed as a New Yorker that New York was going to have its day. And I think we're there, and it's only growing now, and the communities are growing, and it's really incredible to see.
Do you think, going back to the AI thing for a minute, do you think that we're in a bit of a bubble?
We're good as an industry in creating bubbles. That's one thing. Yeah. Like historically, we love to create bubbles, and this is the next one, and there will be another one, and there's always bubbles. That's what we do, and that's what certain VCs in our ecosystem like to fund. But bubbles create, I think, as they burst, they create. That's when the real, I think, healthy, scalable companies come from that. So you need to go through the bubble, and we are going through. I mean, you're seeing some valuations that are just crazy. You're seeing businesses again raise billions on billion plus valuation with like very little revenue. We are doing it all over again. We don't seem to learn, but that's what makes it, I think, interesting. And that's what's so exciting, because I went through this with mobile and cloud, and you always see these moments over time, and then the real builders build, or you need that to build. Like, listen, the cost of compute and these models are going to go way down over the next 10 years, right? It's going to, just like cloud, it's going to be a race to the bottom. And so that's going to unlock huge opportunities. And so my guess is, like we've seen companies that may have failed 3 years ago because they were ahead of the game, you're going to see a similar idea 5 to 10 years from now. They seem to repeat with new technologies that allow that to happen, like Uber.
A topic that's top of mind for GPs and founders alike currently right now. When do you think the IPO window is going to open?
I would love to see us get back to a world where companies can IPO much earlier in their life cycle. I think that was really healthy. I think getting companies public early on. I know recently, I'm blanking on who said it, but I remember them talking about, I think it was at the information conference, that you really need to be a $10 billion company to IPO. And I think that's terrible for our economy. I think it's terrible for innovation. So the answer is, I think once we get through elections and we figure out when interest rates are finally going to start on the decline, provided the economy's, it's not interest rates we're finally cutting because the economy is terrible. I think it's interest rates are finally getting cut. We've got inflation under control. I believe that will start to open up the IPO window, but I think we still have a massive problem. I think we have two problems. One is the incentives for these banks to take companies public need to change. We need new, new bankers, new incentives to get smaller companies public. But I also think some of the, and not to get like political, but I do think the antitrust environment, it's kind of, there's unintended consequences of this environment, which is we need bigger companies to buy smaller companies, right? Maybe you don't need Microsoft or Amazon, but we need the next level. And we can't have companies scared to acquire companies, because that helps perpetuate this innovation ecosystem. So I worry about that. I think that's a big problem, maybe even a bigger problem in the IPO window, is just there's a lot of companies that 10, 15 years ago would have been like buying and taking advantage of prices and acquiring talent, buying companies that maybe were subscale, incorporating them in, that I don't think are doing so because of the regulatory environment.
All right, so now we're going to move into our 4 standard question segment. We're looking forward to hearing your answers, Steven. The first is our NVCA question. So the National Venture Capital Association advocates for public policy that supports the venture community and the American entrepreneurial ecosystem. If there is one thing that you'd change about the VC industry or one policy that you would advocate for, what would it be?
I would say the venture capital industry is one of the core arteries for our country that allow us to compete and build the best technologies in the world. That's critical for the growth of our economy and national security. Entrepreneurship is truly what creates upward mobility in this country, yet we have so many obstacles in place that create unnecessary challenges. I think one example is that it's extremely difficult to invest in entrepreneurs unless you're an accredited investor or qualified purchaser. And the hurdles to access funds and entrepreneurs are incredibly difficult. So I really do believe we need to modernize these laws to allow more investors to access venture capital, just like the stock market. We need to incentivize bigger companies to invest and acquire companies, not make it more difficult. We need to support and help venture capital companies in large-scale regulated industries, not make the laws so rigid that only large companies can benefit. So it's just a starting point. I'm not sure if that's exactly as like just NVCA specific, but I think these are issues. These are macro, I think, issues that do hold up the broader industry and broader innovation economy.
Absolutely. And definitely it's a very common answer that we receive too. I think everyone in our industry is very much on the same page on that and opening it up. Number 2, if you weren't a VC investor and money wasn't a concern, what career would you have?
Yes, that's a good one. Since my genetics, among other things, prevented me from playing professional basketball, I do exactly what I'm doing. I mean, prior to being a VC, I spent the last 20 years helping build the New York City tech ecosystem, which we talked about. I was president of Foursquare, which had amazing talent and people. I partnered with some of the best people I've ever worked with to help build Quattro Wireless during the early mobile days, which we sold to Apple. I love the thrill of building a company. I'm building my own firm, really, supporting founders to help them realize their potential of building the best company they can build that will transform the world. And I love to invest in talent who I think will change the world. So, maybe I'd be a professional basketball coach, but since that's not in the cards, I get used to, that muscle to coach. I work with amazing entrepreneurs and I'm truly lucky to do so. And so I guess I get some of that coaching fulfillment.
I'm going to throw a bit of a curveball. So question 2.5 is what's your favorite restaurant in New York?
I'm going to go with the tried and true. It's something I've been going to for a long time. It's still great. It's Sushi Gary. Anyone who knows me knows that if I'm looking for sushi.
Where is that? I don't know.
So there's 4 locations. It started on the Upper East Side, which is where I live. That was the original one. That's where Gary, who used to sit behind the counter, started. And then there's one in Tribeca. There's one in the Upper West Side. There's one in the Theater District. So it's still great. There's lots of other new sushi types, new sushi places. But if you're here and you want sushi, you will always have great sushi at Sushi Gary.
Do you prefer uptown or downtown? Not about the sushi.
Now downtown. And that's partly because I live in New Jersey and I come in from New Jersey. So it's just a lot easier. No, but I've always opened up. Like I was in Soho yesterday, and I was meeting with actually Haley Barna from First Round, and then I had a breakfast at Crosby Hotel, and then a lunch at Lore Fish Bar. Lore's another one, staple.
Yeah,
I'm going to forever.
Okay. So
and I was telling them, I said I spent a lot of years opening offices between like Bleecker and Broadway and Spring and Broadway. So I've always loved Soho. I lived on the Upper East Side. It was great having kids there, but my choice is always going to be kind of Soho and more, not all the way downtown, not Wall Street downtown, Soho downtown.
What's your perspective on safety in New York? I know a lot of people are like, concerned about going to the subway now and these things. I love the subway, by the way, just to be clear. And I take it all the time because it's so much easier. But as somebody who has lived in New York for a long time, like what are your thoughts about the whole situation?
I mean, you should have been here during the pre-Giuliani days back in the 80s and 90s. That was scary. That was different times. Listen, I think Bloomberg really cleaned up the city the last couple of, last years, and because of COVID, there, I think we took a few steps backwards, but, I don't want to jinx myself and knock on wood somewhere, but I take the subway every time I'm in the city, all the time. I take, trains at night. Every restaurant's back open, lights are on, people are out. I think it's still, overall the safest city in the of big cities in the world. So I feel comfortable. I love it, and I'm never like freaked out. I mean, there's certain neighborhoods I wouldn't go to, but if you stay,
well, those neighborhoods are in every city, right? But that's a good testimonial. So
New York
thank
is
you.
great. It's safe. Don't believe anything you read. Come visit.
Number 3 is, who is someone that you look up to and why?
I've been very lucky to have met Steve Jobs prior to Apple acquiring our company, which was Culture Wireless. I've also been lucky to have sat in nearly 60 board meetings with people like Ben Horowitz at Andreessen Horowitz, Albert Wenger at Union Square, Barry Schuller at DFJ, Bijan Sabet at Spark Capital, Bob Davis at Highland Capital. There's something about them all that I've learned from over the years to be the best possible, I think, entrepreneur, operator, and investor. There's a level of curiosity and greatness that they all have that kind of inspires me. So I don't know if there's any one individual. I think it's just I've been very fortunate to be around a lot of amazing people. I just try and learn from them, take what's best, and kind of take my viewpoint of how I want to take some of what I've learned and apply it in my daily life.
Number 4 is, what is the best piece of advice you've ever received?
I thought you were going to give me a 3A or a 3B on that.
Well, no, I actually have, I do have a 4A.
I think it's, it may be cliche, but I think trusting your gut. Although you may be wrong, I think you're usually right. And it's really difficult to put into practice. And I admit that I definitely don't always do it. But when I don't, I often look back and regret it.
That's good advice. Number 4A is, how would you describe a New Yorker?
So it's funny because one of the things we say is every cap table needs a little New York. Whether the company started here or not, you need a little New York. And I think New York is about grit. It's about hustle. It's about overcoming obstacles. It's about overcoming rejection. It's about a velocity and pace that you need to keep up with or you'll be left behind. And it's about understanding people and cultures at such a diverse level that I think, it's what makes New York so special. It's why I've said no to moving out west. And of course, you can find, the best food, and I'm a foodie, so you can find lots of amazing food here as well. And so I think New Yorkers know that, they know what a slice of pizza is. They know what a slice is. They know what a good bagel is. But no, I think, again, it's all those, it's those, that toughness, that hardness that one needs to survive and thrive here.
Yeah, no, definitely. I think New York is definitely a place that kind of breaks you down and requires you to build yourself back up in a way. And that's like kind of what creates the strength that a lot of people have. Because I mean, I love New York and I lived in New York, and but it's a tough place. But then kind of once you feel broken by it a little bit, you are able to kind of build yourself back up again, if that makes sense.
Totally. You have to. You don't have a choice.
Yep.
Or you'll get crushed.
100%. Yep.
Steven, thank you very much for joining us today. Really appreciate your time, and we enjoyed learning about you and about Oceans.
Thank you. This was great. Always great to spend time with you both, and congrats on all the great stuff that Proof does as well.